All right, welcome everybody. Nice to be here. My name is Courtney Powell. I am the Chief Operating Officer and Managing Partner of 500 Global. 500 Global is a multi-stage venture capital firm that started first in 2010 in Silicon Valley and today invests in over 80 countries around the world. We focus primarily on seed stage investments, but as we've grown, have now started investing in incredible companies all the way through their life cycle. And we're going to start today with a very quick few slides that talks about the opportunity for investing in what we call the rise markets, the 30 fastest up and coming markets around the world that we believe are really going to change the game for entrepreneurship. And then we've got a lovely panel with some incredible investors and entrepreneurs, and we're going to hear firsthand about their experience investing in emerging markets as well as in the US. So we will go ahead and get started. All right, so we're going to go through a little bit of data here. And as I said, we've been investing across the world for 13 years now. And we really became interested in what it is that's really driving innovation and where. So if we think about internet users worldwide, it took 20 years to get to the first 2.5 billion internet users. It will take another 10 years to reach the next 2.5 billion users, so cutting that time in half. But by the time we reach 2040, that total number of internet users is going to be over 7 billion. And this is a really important consideration when we start to think about the future of entrepreneurship, innovation, and technology. So what we've identified is what we're calling the global tech stack. And the global tech stack is made of software, connectivity, and hardware companies. When we think about this global tech stack and these opportunities, the market cap, the value that is going to be created across the global tech stack is over $30 trillion. And why does this matter? Today, when you hear from the investors and the operators that we're going to have on the panel, we're going to focus really specifically on startups and why startups are so critical to driving not just innovation, but long-term GDP growth across the countries that we're going to talk about. So what's incredible is that the number of startup deals has continued to rise over the years. And even more importantly, when we look at where this innovation and these startups are coming from, today we have over 50 countries that have had one unicorn created. And this is sometimes counterintuitive to what a lot of people think about when you think about innovation and technology. People think of the US, people think of China as really driving innovation. But actually, if you take a closer look, the number of total unicorns worldwide, over 50% have been founded by non-US founders. And when you take an even deeper look within the US, actually over 80% are led by non-US founders. And this is an incredible indication of just how global the entrepreneurship and startup opportunity is, and why as investors and as founders and as operators, we need to keep this front and center over the next decade. And not just that. So when we take a look at companies that have already grown past the startup stage and are now kind of multinational, what you're really seeing is that their share of revenue is coming largely from outside of the US and China as well today. And this is important when we're seeing new companies being launched and generated, you have to have that global mentality from day one. And that is very different than how things started over the past decades. In fact, if we look at the top 5 tech giants today, you can see NVIDIA, Apple, Alphabet, Microsoft, and Amazon, nearly 50% for most of these large platforms are already coming from outside the US. All right, so today, as I said, so many people believe that really the largest opportunity is going to come from the US and China. But as I said, the way we are thinking about the future of innovation, we've identified 30 markets that we call the rise economies. So if you take a look, we are looking at Mexico, Canada, Spain, Saudi Arabia, Indonesia, India, South Korea. So many incredible markets today that we're already seeing really incredible development across the startup ecosystem. We'll dive a little bit deeper into this, and when we finish, we'll give you a QR code to be able to download this data and parse through it yourselves. But what's incredible is that if you look at these quote unquote rise markets, these 30 future economies that we see developing at an incredible rate, until 2027, the combined GDP of these rise markets are actually greater than that of the US and China. So again, from an investment opportunity, from a development opportunity, ignoring these markets would be very misdirected and really critical to keep in the top of our minds. So what is it that actually makes up the rise economies, these rise markets? Well, as for starters, the population amongst these rise markets is huge, over 300 million, over 3 billion in population when we are combining and taking a look at these markets deeper compared to that of the US and China. Additionally, we're seeing that the population growth is much more significant within these rise markets. In fact, here, if you take a look at the estimated population growth, not just of the total population, but of the youth population in particular within those markets, that tells us that this incredible technological transitions, the creation of new startup value and new innovation value is going to be continued to be driven by the youth, as well as things like the ongoing development of a network access. Network access in these rise markets is going to change everything. I think Africa is actually an incredible opportunity to look at. There you had populations that just completely passed the desktop phase, went straight to mobile, which means they leapfrogged in innovation, and today their entire economies are run off a mobile device. These are important trends to pay attention to. And of course, the advent of e-commerce that we all, within the US, the adverse of e-commerce was relatively incremental, right? So the impact across the population was incremental. But today, people are jumping right into e-commerce, right past desktop commerce, and truly mobile and social commerce is what an entire population group, an entire youth population is now native to. And last but not least, if we think about digital payments, this is such a critical aspect of the future of innovation. Wallet access in particular in these rise economies is driving financial inclusion, it's driving innovation, and it will continue to play a really significant role as we see the future. Now, a couple of things we're going to talk about today and why I think these rise markets are so fascinating from an investment perspective. If you look at what we call venture penetration, so venture penetration is essentially the look at how much venture is being deployed per capita, right? And we compare these markets to how much venture is deployed into the US or to China, for example. We see that those levels are not on par. The opportunities existing there, but the amount of capital being deployed has not yet caught up. So from an investor perspective, that means that there's tremendous upside and you can create an incredible advantage, whether you're a startup or an investor. So we've taken a close look at this venture penetration. And the only markets that we're seeing really venture penetration, that gap being closed, is Singapore and Israel today, which means that there's 28 other markets where we're expecting the venture market itself to need to catch up, to accelerate, and to be able to take advantage of those opportunities. Going to jump forward there. So as I said, this gap is not just underpenetrated. The amount of venture capital is not just underpenetrated, but the gap in some instances is actually widening. And as we see the macro economy become more and more unstable, we would expect that this gap may unfortunately grow even more. But for the shrewd founder, the shrewd investor, that means the opportunity is that much larger. There we go. All right, so one of the things we're going to jump right into today is within these rise economies, a lot of these economies are really going to need the support of multiple stakeholders, not just venture capitalists, of course, but governments and state-owned actors who are going to come in and help to drive regulation, help to drive opportunity, help to drive funding in order to see these markets accelerate in the way that we all believe that is possible. And finally, and we're going to jump into this with some of our operators and investors and founders within this conversation, we're going to mention here three key opportunities, three key sectors that as we've developed and have been a part of developing markets around the last 13 years, that really play a key driver and should be an indicator for all of us of when a market is accelerating. So typically software, the broad category of software, is the biggest driver of innovation when one of these markets is truly coming online. But if you dive into that a little bit deeper, we actually see that e-commerce is actually typically the first market to really see $1 billion exit within an economy, within a startup ecosystem. And as I said, we're going to cut it off there so we can jump right into the conversation. But I encourage everyone, you can feel free to screenshot our QR code here. You would have full access to the data and the creation of this, the output of this report. And we encourage you to take a look, share with us, ask your questions, and hopefully you can use that too as we jump into the conversation. So thank you very much, and I'm going to now welcome our panelists. Okay. All right, so ladies and gentlemen, please join me in welcoming Alfred Chuang, the founder and CEO of Race Capital. Thank you, Alfred. Just a quick background on Alfred. He is the founder and general partner of Race Capital, recognized by Andreessen Horowitz as Silicon Valley's CEO's CEO, a very well-respected and incredible both investor and operator, which we're looking forward to hearing much more about. And next, we will welcome Mei Gao. Mei is a partner at IDG Capital, a leading China-focused alternative asset management firm with over $30 billion of assets under management. Thank you, Mei, for joining us today. Next, we have Laura Gavieri-Halaby. Thank you, Laura, for joining us. Laura is a tech entrepreneur, an investor, and operator. She's a member of the founding team at Factory, a generative AI platform, and formerly focused on investment across Latin America with SoftBank. And last but certainly not least, here we go, we have Eric Manlunas, who is the founder and managing partner of Wavemaker Partners. An early-stage venture capital firm with cross-border investment, which he founded in 2003, and is dual-headquartered in Singapore and Los Angeles with over $900 million in assets under management. So thank you all for joining us today. We just talked a little bit about the opportunity for global cross-border investing and how that is really going to drive the future of innovation and entrepreneurship. So I'd love to hear a little bit about each one of you and whether you agree, disagree, your thoughts on this thesis and what you've seen. So we'll start with Alfred.
Well, Courtney, maybe perhaps I should mention a few things given this context and especially given that I'm from the Silicon Valley. Maybe I'll talk about the US piece a little bit first and how things are evolving. So just a reality check first. This has been a very tough year. So total venture investment globally is down to $221 billion up to the end of October. And this is down from $381 million from the same period a year ago. US actually down even more. So it's a very, very tough time without doubt. Now the good news is, from my own personal experience, the best companies are founded during this kind of time. So if you look at, like, Google was founded in 1998, really pretty horrific time right after the Asian financial crisis. And you look at then a decade later, our infamous financial crisis around the globe in 2008, we saw companies that I was very close to, like you saw the Airbnb, Uber, Slack, Cloudera. That's just so many of these successful companies were founded right in the smack of a crisis. My own experience has been, BA was founded at the end of 1994, horrifically terrible time to do this, very hard to raise capital, and then we were able to raise $50 million capital at the end, went public in 97, and then did a major left-hand pivot at the end of 1998, and our investor, which gave us $50 million private money, returned almost $7 billion of capital back to the LPs. Wow. So I don't think these things are accidents. So I think bad times are a very good time to start companies. So I think especially given now tech is global, as you have seen on your slides, I think that opportunities abound. Let's talk about what is hot. Without a doubt, AI is super hot. I think it's hot. I mean, most of the people, I think, in this conference are talking about, is it hype? Is it going to last? What's going to happen? I've been doing middleware, investing in the data, companies like Databricks from the very beginning, and all kinds of stuff. Without a doubt, this is the most profound innovation we've seen, perhaps much more exciting than the birth of the internet.
Wow.
So I think we're going to see insane stuff. Right now, we are only using chat as an interface, and we know business is not operated on chat. Business is operated based on automating process. So we haven't scratched the surface of the things that we need to invent to make this happen.
And Alfred, quickly, you mentioned something earlier that I think the audience might be interested in, which is there had to be the not just the infrastructure available, but there had to be the quantum of data available to actually get to where we are within AI. So could you kind of quickly share that before we?
So post my time when BEA got sold to Oracle in 2008, I became very focused on the subject of big data, because people have thought up to that point the operational data, the stored in relational database, was it, right? But it turns out that wasn't it, because the e-commerce business started to emerge. And when that emerged, the activities data becomes significantly more valuable and interesting to this equation. I think this must be in 2009 to 2010, my light bulb went on to say, wow, I think the future is we at some point in time will be able to use machine learning to derive decisions out of this data. But it took a long time. It took, first of all, a major movement to first get big data onto the cloud. That was a very, very big deal. It took 5-6 years of deep university research to give birth to that technology. And it took literally 10 years to mature to a point where it happened. A neural network that starting to represent the thinking of a human and be able to operate applications that way. This is very serious.
And when you think about this from the global opportunity and these rising markets, does AI, does the evolution and the opportunity, is it any different from what you think about is going to be the opportunity in Silicon Valley?
So the stats right now is very interesting. I did a map right before I came here of all the companies that have been founded in the last 2 years in AI, right? Surprise, surprise. 81% of them are within 60 kilometers radius from San Francisco. Now, this is not surprising, and I want to add to one fact. More than 80% of the people that found those companies, they're immigrants. Or may actually just travel from somewhere else, including from this country in this region, to go to San Francisco to give birth to those companies. They may not stay there. This is because that's the most convenient place to congregate the people, to share ideas, to give birth to those companies. And I think along the way, that will change. And I think this time around, it's not going to be all concentrated just in Silicon Valley in terms of innovation. Once the birth processes happen, it's going to spread.
Amazing. Thank you, Alfred. We'll come back to AI. May, tell us a little bit about how you're thinking of the rising economies and the areas that you're investing in. What's the opportunity?
Yeah, definitely. Thank you. I think Alfred earlier mentioned that this year has been a tough year. I think it's true in lots of areas. But in the green tech sector, we're seeing actually accelerating investments. If you look at China, in 2022, it's spent 546 billion on green initiatives. That's nearly half of the global total. And we at IDG has also poured over 1.4 billion US dollars into green technologies, supporting over 100 companies that achieving a reduction of 11 million tons of carbon emission in 2022 alone. And if you look at China's journey, it's actually very interesting because it learned environmental protection lessons from the global north following rapid industrialization. But right now, there is a rich reservoir of knowledge within China's green tech sector waiting to be shared. And we all talk about collaboration. I think this mutual exchange is not only beneficiary, it's really necessary for progress. And like to underline this spirit of cooperation, we also recently set up a joint venture with Legal & General, which is one of the largest asset managers in the world, to focus on green tech investments.
Amazing.
Thank you.
Amazing. Well, we're going to come back to green tech. Thank you, May. Lada, what do you think about all of this? What's the opportunity here? How has it been influenced by your experience in LATAM as well?
No, exciting to see that we're talking about the rising economies. I think one of the regions in the world that is more overlooked is Latin America, and you mentioned key points that are very important for the region. So Latin America, in terms of size, it's 700 million people, which is significant. Today, it holds one of the top 10 economies in the world, which is Brazil, and by 2050, we're going to have Mexico as well in the mix. It has a 6 trillion GDP, which is twice the GDP of Southeast Asia, twice the GDP of India, and half the GDP of China. And for where we're living today in terms of the need for food security and the need for natural resources that are going to be indispensable for the transition to clean energy, we also hold some of the largest reserves, including lithium. And we're still not seeing enough attention going to LATAM. And with everything that you're saying, Alfred and May, in terms of the slowdown in capital going everywhere in the world, Latin America was the one with the biggest hit. It was like I think it was minus 64% from the levels that we got in 2021 on where we have today. So there's huge opportunity in our region, and it's still overlooked. In terms of digital penetration, Courtney, that you mentioned, I think we have one of the heaviest users in the world are in LATAM. In terms of social media, we're the number one users of WhatsApp, Netflix, Facebook. We have 3 of the largest markets for Uber. E-commerce, for example, Brazil is now getting to the levels of the US. And fintech, which you also mentioned that it's really important, we hold 25% of the world's fintechs, which is huge as well. So I think the most important part is what you said, for us to look at investment globally, and that there's an amount of opportunity that it's happening in LATAM, and we should be looking that way. And just to add one more thing, which I think it's interesting, Alfred, as well, in terms of AI, we look at AI in Latin America as an immense opportunity. Of course, it's going to most likely displace some jobs, but there's so many relevant problems still needing to be solved in Latin America that this is an amazing tool to bring more people into the economy, to solve problems in terms of education, healthcare, and a lot of things that are going to be much more difficult if we didn't have technology.
Eric, what's the opportunity?
Yeah, so I totally agree with what you just presented right before the panel. So Wavemaker was founded in the US in 2003, and we became cross-border around 2011 and got started in 2012. The reason we wanted to be in Southeast Asia was, first of all, I was very comfortable in Southeast Asia. I was born and raised in the Philippines, but that was not enough of a reason for us to invest there. We were looking for force multipliers, economic factors that we believe will really create a lot of tailwinds that will power this innovation economy for the next 2, 3, 4, 5 decades. And when we started investing in Southeast Asia, we saw problems that we're not seeing in the U.S. as an example. There's a lot of agricultural related problems. There's a lot of HR related problems. There's procurement issues with SMEs that were not necessarily that prevalent in the U.S. So that excited us. And when we were looking for these economic multipliers, we thought that the demographic dividend was going to really power this run. We looked at the infrastructure and housing backlog as positives. They're not necessarily obvious for startups, but these are the types of economic multipliers that really create a lot of tailwinds going forward. And let's face it, the fiscal situation in a lot of the governments in Southeast Asia are a lot more stable than the rest of the developed markets. So that created a lot of stability for sure last 10 years, and will create a lot of stability in the next 10 to 20 years. And most importantly, the rapidly growing consumer class or middle class cannot be ignored. And this is where the consumption will come. So we were very bullish, and I think the last 11 years we've proven that it was the right time to enter there. When we first got into Southeast Asia, primarily out of Singapore, it was night and day compared to what it is today. So totally agree with the report. Kudos to the report. I'm glad you guys did that. Sounds like a lot of hard work, but I'm glad it's out there.
I'm curious too, just as a global investor. I know we have some founders in the audience here. What is it? Do you ever see a difference in founders, market to market?
Yes, but the common denominator is the grit and resilience are there. These are hungry folks that really are determined to solve specific problems they've identified. There's that missionary and mercenary classification, but I'm fairly agnostic when it comes to those. There's always, they're keeping their eyes on the prize in terms of what their ultimate goals are. But yeah, there's definitely differences. But the grit, the energy, and the hunger are all common denominators of entrepreneurs we see all over Southeast Asia and guys that we meet in the U.S.
Amazing. Alfred, coming back to something you said earlier about the opportunity for AI now no longer to be so concentrated within Silicon Valley, what do you think it will take for the rise economies around the world to be able to invite that innovation, to see that innovation in AI thrive?
So one of the very critical thing to think about is, like, I'll give you an example. You know that Google was the 20th search engine. They weren't the first. So the internet was already invented 4 or 5 years into this process when Google showed up in the picture. So most of the people don't know. They think, well, they were there from day one. They dominated the world. That's it. We only Google everything in our life. It wasn't the case. So they earned their way into the process. Now, we are in a very, very interesting time of the world now. We hardly, as a firm, invest outside the U.S., but I have some. Like we invested in a company that was based in Hong Kong back in 2000, called GoodNotes. They are really rocking and rolling. They added AI. They were started as a notes-taking application on an iPad. That's all they had. Racked up more users than YouTube and Netflix combined on it.
Wow.
And then now pivoted to become a full-blown collaboration application. Revenue has grown 10x in its time. So it is entirely possible. And they headquarters now, they go between London and Hong Kong. And most of the developers in Spain.
Incredible.
So I really do believe AI, which after this first inning, will reset itself to allow everybody to do a lot of stuff. I think we all know, like for example, our Crown Prince here has bought a lot of GPUs for his own local company to train his large models, right? So I think the ambition and the talent are being groomed. I met a bunch of very notable researchers locally in this region this week. I mean, it's given me a lot of hope that we need more people to do this, right? Otherwise, normal cycle takes 10 years.
Yeah.
To shorten the cycle, to get AI to make it productive and ethically productive for our next generation workforce, we need more people participating. I'm actually extremely hopeful. This region, I think in Southeast Asia and Latin America, I mean, I have dabbled in the things in all these different places myself. I'm extraordinarily hopeful.
Amazing. That's great to hear, and
Yeah.
I hope you got into that company at seed.
Yeah. We'd only invested. So, yeah.
Oh, even better, even better. May, what about you? I mean, you talked a little bit about green tech and the investing you're doing there. Is green tech truly a global opportunity, or are we going to see, what do we need to see from in these ecosystems around the world?
Yeah, absolutely. We do think it's a global opportunity. So we at IDG, our goal is to support our entrepreneurs. So we were the first investors in Baidu and Tencent, and we grew with our entrepreneurs over the years, and we go wherever they go. And increasingly, we're seeing our entrepreneurs are seeing opportunities in all the regions you have talked about, like Southeast Asia, LATAM. We saw lots of our entrepreneurs set up factories in Vietnam, in Mexico, right? And especially in the green tech area, I mean, just look at this region. There is a huge solar plant. It's built by a consortium led by Saudi Arabia and China. And by the time it's finished, it's going to have 2.9 gigawatt of capacity. So this is really a testament to our host's commitment to renewable, but also the power of collaboration.
Wow. That's a very significant investment, because as I understand it, that would be roughly 10% of the available power that exists today that's usable to support.
Yeah, absolutely.
So,
Yeah,
wow.
on top of it.
Laura, I think we have a shared portfolio company from your time at SoftBank, Kavak. And I'm curious, could you share the story just in terms of how they're thinking about moving from one region to another?
Yeah, and there was one more thing that I wanted to add about LATAM in terms of the type of entrepreneurs that we have, which Eric mentioned. Of course, the resilience is there, but I think one of the key things that mention about emerging market entrepreneurs in general is that they know how to navigate tough times. It's not the first time that they're having to innovate in an environment with extremely high interest rates. That's the norm in countries like ours. There's a norm that it's not the first time that they have to navigate geopolitical instability. No, we live with that in all of our countries. So I think that makes Latin American entrepreneurs even more special and the opportunity even bigger. And not only Kavak, but we have companies, for example, like Gympass, that are from Latin American entrepreneurs that are born and raised in Latin America, but that are playing a global role. Kavak is already in several countries outside Latin America. Gympass, for example, is already in 11 countries beyond Brazil, making it completely a global country, a global company. And we used to think that Latin American companies would just stay in LATAM. And now we can see that the talent is there, the technology is there, and that they are able to actually be completely global, which is amazing.
Yeah, no, that's incredible. Eric, and just aside from AI, as a global investor, what is it that excites you right now?
Well, we favor a lot of automation, data, and intelligence platforms. So we've been your boring enterprise software investor for the last 20 plus years. And so we continue to be excited with a lot of the processes that will be automated. Data becoming more and more now. I saw some stat that it exponentially grow leaps and bounds for the next 10, 20, 30 years. So there's going to be a lot more of these platforms to play with. And so, yeah, so automation, data, and intelligence platforms continue to be something that we get excited about. There's a lot of problems in Southeast Asia that could be automated. We're big fans of these things because automation leads to a lot of productivity, data leads to a lot of insights, and intelligence platforms really lead to these breakthroughs that can create global companies out of anywhere in the world, especially in overlooked regions like LATAM or Southeast Asia. So we get excited with probably one of the most boring segments out there, but that's who we are.
Amazing. Maybe one last question, and then we'll open it up to the audience. As investors, what do you think? Do you think AI will have an impact on how we invest?
It certainly will. I think most firms, I mean, as I hear in the audience here, whether it's green tech or it's specific geo sectors or it's boring enterprise software in Southeast Asia, data means a lot, right? So we love your report because we're data people, right, by default. So having the ability to have intelligence that coming out of the data is one of the most crucial things, because to be able to find out whether this trend is real, whether this company in this sector is going to happen based on prior success and relatable kind of industry is crucial stuff. I'm going to imagine 20-30% of our business will be driven by AI ourselves, and I'm already seeing a lot of it, and our associates, our engineers are using AI to do stuff, and then we're astonished by the report they can produce in such a short period of time.
Amazing.
Due diligence that we could do that we otherwise wouldn't be able to find out. Yeah.
I agree with Alfred. I run the special interest group for Kaufman on AI, and you have all of the investors there trying to understand how to use the tools. Of course, how to use internally to run their firms so that it can be with less people. How to make sure that their time now it's spent in much more interesting things. Not only their time, but their VP's time, their associates' time is used on much more relevant things. How they analyze companies. So one thing is, of course, there's a million new companies in terms of AI that are rising. But the other thing is how are the either incumbents or the new companies that are not going to be core AI using AI to scale their teams, to manage their internal businesses. And I think it also makes it very different on how you have to do due diligence. You have to analyze every new company or every growth investment from now on. If these companies are not thinking on how are they going to make their processes more efficient, internally, in addition to independent of their product, is not going to be enough to compete in this new world.
Yeah.
Courtney, actually, we recently invested in a AI sales company. So we rarely do we do this kind of stuff. It's a company called Persona. A couple of very smart founders came out of LinkedIn for many years. In fact, Edith, my partner Edith, she's very adventurous. So she decided to become a customer herself and run it to find companies, to find investors through the software. So we're dogfooding our own investment,
That's amazing.
and that's very hard to do in normal circumstances. But I think in AI, this will change a lot of that kind of things. Yeah,
Great point.
yeah.
So obviously at IDG, we are a technology-first company. We have our fingers on the pulse. So obviously thinking AI is going to disrupt everything. But in my volunteer activities, I also serve as a governor on the CFA Institute, the Chartered Financial Analyst Institute. And we have been also like zero focus on AI, how it's going to disrupt the industry. So our focus has been not only how AI is going to improve investment, but how to help the people that might be displaced by the AI innovation to make sure that they are reskilled and have the skill set that is required to succeed in the asset management space, which we think is going to be different than today's.
I hope so. I think it will affect the way investors behave, the way investors pick their investments. My 5-year goal is for AI to make me irrelevant. The reason I say that is because I think there's a lot of things that machines can do better than humans. That's not to minimize the human interface. I think the human interface will still be there and it will still be very important. But a lot of the things that could be automated will, I think, create a lot more convenience, so to speak. You can use your time in better ways than just doing the same things that a machine can do for you. So we'll see. I think humans will still be around, but I think humans.
Let's hope
I,
so.
I think AI will take over a lot of industries, including the investment industry.
Amazing. Any audience questions? We're happy to take. Come up and then, since I don't have a mic, and you can ask me a question.
Well,
Emerging markets.
Perfect. Thank you.
Thank you for the great chat. So emerging markets has always been growing faster than mature markets. But curious, how do you all assess? Are there specific factors you look at that say, okay, this is a factor that's going to de-risk this market? For example, going to Southeast Asia, LATAM, China. What are some de-risking factors you say, okay, now is the time to really start investing in these opportunities? We're looking at emerging markets.
I'm happy to maybe pick this one up and then share with the group. But from 500's perspective, as I said, we're investing in over 80 countries. And because we were investing globally from day one, we had to really develop a framework, as you said, for how to de-risk and how to hedge, the bets that we were making. I would say one of the very significant drivers is the government stability, right? You have to have the infrastructure, the stability, the regulatory predictability in a market. And what that often means is that if you're considering one region versus the other, it's identifying what country within the region has the most stable economy, has the most stable regulatory framework, and the desire to then really become kind of a hub, if you will, for startups. So for us, it's a little bit less about a region and more about identifying the right country within the region that is going to be, that real cornerstone of the market broadly. So that's one big consideration, as well as what we talked about earlier on, kind of youth, cell phone penetration, et cetera. And then I would say finally, just technical talent. The raw engineers, number of engineers that are graduating every year, very, very significant to the outcomes of markets and others.
Yeah. So when we were raising our first few funds in Southeast Asia, we get asked a lot about that question. And to me, the word de-risk is really just code for how do we exit these things, right? So let's face it. I mean, investors like liquidity at the end of the day. And the way we approached it is, somebody asked us, how do you make a company valuable? Which I thought was a silly question, because a valuable company means you build a real business, not a lot of the hype, not raising a gazillion dollars in multiple rounds does not make any company great, or certainly not make any company successful. They now have the tools to try to be successful, but that in itself is not what makes them successful. So I think the last 11, 12 years, what's been proven is the way you de-risk it is by just really attacking the problem head on, building the solutions that really is designed to solve for that problem, and eventually getting all the customers to use it. And then once you do that, you will have a very valuable company, and buyers from developed markets such as Europe and North America will come, as they have proven the last dozen or so years. So I think over time it will de-risk itself, but markets like Latin America, Southeast Asia, there are a lot of problems that could be solved there. And I think the right solution, attacking the right problem, will naturally de-risk any financial investment.
I agree.
I think adding to that, given the outlook for 2024 is likely to be very similar to 2023, that means money is going to be tight for funding any stage in tech companies. This is kind of my view. That only really, like, so far, we've seen two countries where, like China and the US, where you can build technology and it can be fully consumed locally. So it has a unique advantage, right? So you never have to really worry about getting product market fit, and you go to market beyond your existing, knowledgeable market itself. Now, I was recently in Singapore for a couple of weeks, and there's a lot of very interesting and exciting things going on in Singapore. But then the addressable market clearly would be, the immediate addressable market would be Southeast Asia. So I think what this compression has done is the thinking of starting a company to the time you have to think about product market fit is extremely short. You don't have time to DD-downing around and creating very exciting thing, raise a bunch of money and see what happens. You kind of have to start thinking about, revenue. How much in revenue to be able to raise the next round. So once you have product market fit, now you have to go to market, right? It's very painful. This is a very painful process. As an entrepreneur, I think I suffer from that the most psychologically, and you have to endure people not making the number. So I would say that would be the most interesting thing for a company that in an emerging market is, where would you go to market? You kind of have to think through that very much upfront, now more than ever. Yeah.
And
Yeah,
to add on that point, oh, sorry.
Sorry, go ahead.
And to add on that point, that's another great advantage that Latin America has. So one is it's only like two languages. All of has Spanish-speaking LATAM and then Brazil. So you can have one language to actually conquer all of Latin America, which is big. We are very different, and of course there's different regulation per country, but culturally very similar. You kind of understand a lot and have going on, and businesses that are not highly regulated, so other than, like, let's say healthcare and finance, the models are really transportable to another country. So that expansion part, it's really key, and it's easier in Latin America than in other parts of the world.
So from IDG's perspective, I like to answer this question from a different angle. So rather than just focus on the opportunities, risks involved in the particular country, we like to look at what we can bring to the table, right? So most of the cross-border transactions we have done is because we have the know-how to bring to the country. So we talk about green energy in Southeast Asia, in Latin America. Our companies have the know-how. And lots of cases is that we can help to bring the company to penetrate the Chinese market. So both ways, we hope to bring our value add, and in this way, we think we naturally reduce the risk.
I think we have time for one more quick question.
If we agree that AI is contributing to its own evolution as a factor, to what extent it will concentrate the innovation in terms of geographical area or spread it, and for that matter, also
Can you get closer?
So if we agree that AI is contributing to its own evolution, to what extent this factor is help concentrating the innovation in a specific area, for example, when you say San Francisco, or spread it globally, and the same, the advancement of a particular company that developed AI models for specific industries?
Well, first of all, I think we are bundling a lot of different tech now in the category AI. Actually, there's no tag company is not tagging AI on top of the company itself. So this is a very confusing field. I think if you go ask around anybody doing anything in any of these groups, they say, "Are you doing any AI?" They're doing everything AI. So we're witnessing that. So let's dissect that a little bit. Obviously, the things that we are now most experiencing with is the results of the large language model, the model that they change. So the more data they have, the more GPUs, and the faster we can run the algorithm, they'll be able to change all the inferences and be able to answer the question for you. It's one type. And I think that ultimately, in time, is going to be a commodity. Because look at what happened to search, right? They don't have to monetize directly through their technology. So if you ask me, I'm actually quite worried about OpenAI. I'm actually on the opposite of the spectrum. For them to be able to grow revenue the way they're growing by selling the technology directly, over time it likely will be replaced by revenue that will be sold indirectly by some other means that will be embedded this inside. The more exciting opportunity will be all the things that alongside with this, which is like governance, right? How do you curb hallucination, right? This is in healthcare, you can't give us a random answer. The person will die. So this is life and death matter. So when we implement those are responsibility. So I think these things are going to take on life of its own. Verticalization likely will happen much faster than the internet. Internet was first started with just purely e-commerce before it got rolled over to a lot of different things. This, I think, will be different. This is going to see specialization very, very quickly. And then different country that has ability to go specialize them will take advantage and grab them. So I think the chances of AI being much more global in its birth is significantly higher than the whole everything else that we've seen, whether it's internet or mobile or social. This will be serious. I am extremely hopeful, which is why I think it's time to travel around to see the world, to establish new connections, because I think the founders we're about to meet might not be just from Silicon Valley. This is just a kickstart. Once it kickstarted, the picture will change. Yeah.
I once heard that somebody said, I forgot who now, that AI will be bigger than fire and electricity.
Yeah.
which I tend to agree with. So I'm sure way back then nobody complained about the invention of fire and nobody complained about the invention of electricity. So I don't know what the hoopla is, why everybody's sort of scared about it. You kind of just have to embrace it. But anyway, so just
Well, on that note, thank you all so much for the wonderful chat, and looking forward to getting connected with everyone. Thank you so much.
Thank you, Courtney.